Trading individual stocks is the biggest waste of time, unless you have two exceptions. You're buying it for a day, maybe to 10 days tops, and you're going to sell it, or you're buying $100,000 or more. People always message me, take a look at this stock. What do you think of this stock? I think this stock is going to go up. And most of these people don't even have a portfolio in the S&P, or they don't even basically have a 401k account, or even just a retirement account or a long-term account, whatever you call it. Buying individual stock is like trying to find a side road before you are even getting on the freeway. It's a waste of time because, one, all the time you spend in it, if you're buying with less than $100,000 worth of it, even if you make the money, the time and the mental capacity is going to take you to check up on the stock, to read on the stock, to find out about it. That's all going to end up putting you in a category where you're making less than minimum wage. Because what? You buy 5-10K in this stock, and the stock, let's say, goes up, assuming you got the math correct. The chances are you sold early. If you didn't sell early, chances are you bought the stock, you don't know how to trade it through options. And still, you're not going to be there for most of the move. Think about Tesla. Tesla from 2012 to 2018, 19, it basically went nowhere. So even if you bought it all along, you didn't make money until that one final year you finally made money. And that's all great. This is assuming you also sat through the whole move and picked the right stock. Most people that are going out there and they're saying, oh, look at this stock, look at that stock. I think this is a good one. And they're reading up on it and they're keeping up on it. And they're saying, I think this is a good one. And going all around these articles, just because you read something, it does not mean it's going to translate into a price move. Plus, even if somebody big like a hedge fund bought the stock, it also does not mean that it's going to go up in the meantime. People who buy stocks in the hedge funds, it's because they have to. They have to put their money to work. You, the individual investor, you don't have that pressure. You don't have to put your money to work. You can just put the money when you think the move is going to take place. But basically, besides trading a stock for less than 10 days or holding it very long term, which I don't recommend to do, it's best you do the S&P. You do options on the S&P, which is basically leverage without the risk. Options is leverage without the risk if applied correctly. You can hear the other audios that talk what is exactly leverage about risk. But unless you're doing long-term in the SPY or you have a very large portfolio already in the SPY, don't waste your time with individual stocks. It's going to take more of your time. Even when you make it, the time you get, the money you're going to make is not going to be worth your time. And this is assuming you held on. Let aside, again, the split focus it takes away from you from focusing on the big picture, the big road. So again, instead of trying to find a side road to get somewhere, it is best you stick with the already paved road, with the already known road, and focus your learning on options, on how to leverage on the S&P or the SPY ETF without basically taking the excessive risk that people do when it comes to margin or when it comes to taking out a loan or trading with money they don't know. Plus, with the S&P, you can always count on it going up consistently, where if it goes down and you buy more, you can count on it rebounding. With an individual stock, that's not the case. You could get the biggest names. You could have got into Sears, and guess what? It's worth zero. You could have got into Nokia, and it's also worth zero. You could have got into BlackBerry. Many names have gone nowhere. A lot of big names also drop, and guess what? They stay low for 3-4 years. And when you're trading the stock directly, you're not making money on the move sideways. Whereas when you're trading options, and again, I only recommend it on the S&P, you're at least making money when you're selling puts and the market is not going up or down. Another thing with big stocks, you can buy a right one. They call them the falling knives, the right price, but it could be the wrong time. I bought GE into 2017. Today we're in 2021. 4 years, the stock is still below the price I got into it. And I thought I'm getting in at a discount at $17. Mind you, the stock went all the way down to $5.50. This is from the high of $33 at some point in 2015, 2016. So once again, stocks, individual stocks, don't waste your time unless it's a short-term trade. If not, just focus your energies on the S&P 500 and into building a large account and just the SPY. Don't waste your time on individual stocks anytime soon.